Hi, team. It's Bill Provost here, and I have the October market conditions report for Southwest Riverside County. This I send out to most of you every single month, and wanted to just kind of go through this in a little different format. This time, just point out some highlights because there's a lot to it. A lot of you have seen me point to this particular slide a bunch of times. The red line is 4.5% growth starting back in 2002 and running all the way through today. So I like to refer to that as the line that represents sanity, because 4.5% average year over year growth would be considered very typical and also very healthy. And so, you can see that now we made it over here almost exactly a year ago. We crossed over that line, and continued to go over that until earlier this year. And now we're dropping down. It's going to be very interesting to see what continues to happen here. I fully expect those are likely to at least meet and and maybe even invert again, but we will see. I think it all depends on what happens with rates and thus or I should say inflation and thus rates. So time will tell, but I do think that this red line does continue to have kind of gravitational pull, and being above it's not surprising we're coming down some. So that's it on that slide. Here, this slide's just detached only. Actually, interestingly, price went up last month, but detached is interesting. Here's this slide. It shows year over year growth, so we're still year over year in the double digits in most of the cities in this report. Yes, growth has certainly declined. Month over month numbers are declining, but year over year, we're still up and up fairly significantly in many of the cities. Let's see here. There's a couple other things I wanted to point out here. Here's the number of sales falling, not surprisingly, not to record lows by any stretch, but certainly in that range now, for the last 5-6 years. Then sales, regional dollars down. This is a slide that I saw that was pretty interesting. So we saw inventory just really vertically going up month over month here, and then you can see for the last handful of months, it's still increasing, but definitely leveling off from the huge increase that we were seeing the previous months. So I'd like to think this is this is a good sign. Again, we're watching all this, but I think seeing that level off is some good news. Year over year, I'm sorry. Well, yeah, these are all comparing this year to last year. Every city is up, as you can see, and some up significantly. But again, that's to be expected right now. And that really is the majority of the kind of highlights in the slide that I wanted to look at. Months of sales, we're still at 2.7 months. According to this report, we should be between 2 and 3 months is kind of considered normal. Over 3 months is over inventory. Under 2 months is not enough inventory, is sort of the way we think about this slide. So we're definitely pushing that. If we're not careful, we're going to have too much inventory. And days on market is obviously creeping up. The orange line is again attached properties. The blue line is detached. And we're at 36 days, again, still not even close to, up here, we're, up in the mid 50s, even upper 50s. So definitely not out of control yet, but still, this is one that's continuing to sort of head in an upwards direction. And that is about it. That's all I wanted to show you on this one. Take a look at it. I'll attach the full report. Love to answer any questions, but yeah, the market is definitely, continuing to slow. I like that inventory is flattening, and I'd love to see if we could get these housing prices to flatten. We'll keep an eye out on rates and inflation. I think those are the keys. Thanks for listening.